Yes, of course, the demand environment is very strong, driven by multiple triggers, a lot of them around digitalization, which is around application modernization, data modernization, digital engineering, cloud. These are some big themes which are expected to play out for a long time, at least 2 to 3 years. Some of these programs will play out as more and more large enterprises engage on significant digital transformation programs. So we are seeing a very strong pipeline. Our pipeline is very high. It's among the highest in the last several quarters. Our booking has been very good. Our bookings went up almost 64% year on year. We won about 8 large services deal and 8 product deals. So all around the momentum is pretty good, and we feel pretty confident and very enthusiastic about the growth momentum in the market.
Well, CVK, you're sounding fairly confident, and in 9 months we've already delivered a top line growth of 13%. Then why not tighten and increase your revenue guidance to, let's say, mid-teen figure of 14 to 16%? What's making you circumspect then?
Yeah, Sanisha, we stopped giving very precise guidance, and we think that's the right strategy from the long-term perspective. Just focus on, we are sharing all the leading metrics, like we hired 10,000 people last quarter, we hired 10,000 even previous quarter. So our pipeline for hiring is very strong, and the booking is very strong. So now it's just a matter of time when this booking will translate. And you're already seeing, we delivered 7.6% constant currency sequential growth. That's the highest growth in the last 46 quarters, right? So it's a very strong momentum that we are seeing. And as we continue to give you visibility of both hiring and booking, I think it should give a very good perspective on what to expect in the future.
Okay, so the deal pipeline as well as the headcount addition that we are seeing is definitely giving us the leading indicators that growth is likely to sustain. But extending that question to you, Prateek, now, despite the very strong performance of the PNP segment in the quarter gone by, you have maintained the full year guidance of 0 to 1% growth. Are you just being, a bit conservative there, or are you expecting a material decline in the quarter 4 on account of seasonality?
Yeah, Anisha. So let me help you understand the PNB numbers for the quarter and therefore the outlook for the next quarter. See, there were 2 factors that propped up the PNB numbers this quarter. Number 1 is December quarter is always seasonally the highest, right? So if you look at, we have been in this now for about 2.5 years post the acquisition. You will notice that December is the peak. So that was one reason. And there is going to be a seasonal decline next quarter, like in any other March quarter, 2 years before you can see that. The second thing is there was a bit of a lag in the previous quarter, which we made up this quarter. And that itself is a one-time in nature, and therefore is not going to recur again. So that is the reason. And the third factor really is that we announced a couple of quarters back that one of our IP partnerships with DXC has come to an end. And that is basically going to zero in this quarter. And that is another reason for the outlook to be a little lower for the current quarter. But as an overall business, we continue to believe it is a very strong business and showing growth even in the previous 9 months or 12 months and so on and so forth, whichever period you look at it. And we are sort of confident it will continue to generate that 0 to 1% growth.
Okay, fair enough. So 0 to 1% growth as far as the PNP segment is concerned. But Prateek, I also wanted to talk to you a bit about margin, because you have marginally lowered your guidance to suggest that the margins will be at the lower end of the 19 to 21% EBIT range. Is this margin pressure only transient on account of attrition, and do you expect it to recover in FY23? What's the outlook for margins, let's say 6 to 12 months down the lane?
Yeah, so that's a very good question, Anisha. And it is absolutely transient. It is linked to the supply side challenges that are there in the industry overall for the last 6 to 9 months, almost a year now actually. And that is what has driven this. Even this quarter we were at 19% despite, good numbers in PNP. So that is the one which is being a little bit of a headwind, but over the next, let's say 2 to 3 quarters, we do expect it to come back. We are investing a lot on the freshers hiring, and freshers do take, a couple of quarters or so to, be completely productive after they are trained and so on and so forth. So that is one investment. The other investment we have also done in the last 9 to 12 months is again on the new geographies. So new frontiers, 7 new countries we have entered, and 5 focused entry countries we are, doing much more investment in the last 12 months. So all those things put together will in FY23 hopefully slowly to start with, and then gather some pace hopefully. They will start showing return on that investment. So that is what we are looking forward to. But as we normally do, our guidance for FY23 will come back to you next quarter and provide.
No, Prateek, I understand you can't give us a number in terms of the guidance, but directionally what I'm hearing from you, is it fair to believe that not only the margins will stabilize in FY23, but there is a room for upside as well and improvement from the current levels? Is that fair to say?
I would expect that in the medium term, Anisha, and in the long term, we have always maintained a range of that 20-ish plus minus 1. That's the 19 to 21 range. And that's what we continue to expect and aspire for and target going forward. It might take a few quarters, but I'm quite sure we'll be back there.
Okay, so 20% and a plus minus of 1% as far as the margin is concerned for FY23. CVK, let me extend that question to you now. The street is a tad bit worried that growth is coming at the cost of margins going forward. Is that something that you are seeing in the industry, or pricing power is something that is returning back to the industry? Have you been able to negotiate better prices with your clients?
Yeah, so Anisha, I think it's definitely, it's not that growth is coming at the cost of margins. I think there is definitely a very good realization in our clients' perspective. When we ask for a higher rates, there has been a very positive feedback across the board. So I think there are three major areas where we are focused on. As Prateek mentioned, it is the freshers. We have close to 10,000 people under training, freshers and laterals in different categories, right? So that's a big number, and they will get into productive, billable work very soon. That's one. Second is across the board, I think, depending on the nature of work, we are able to go back to our clients asking for rate increase. Some of that will take some time to materialize because these are very long-term contracts, and it's a discussion, and it'll take some time. And the third element is, I think, our whole the business is scaling, right? If you're growing at 15% year on year, it is going to give us some scale benefits. And some of the investments, as Prateek said, we made in these geographies, they will also become much better from as the scale increases. So there are multiple levers, and we think this margin is, this is a good cost that we are incurring, and I'm pretty confident that we will we'll get back the margins a couple of quarters down the line. I see definitely a significant improvement.
Okay, so margins returning to normalcy because of the scale up of the 15% revenue growth that we are seeing. But Prateek, you highlighted that the margin miss this quarter in the services business was on account of attrition. What's the overall reading on the attrition picture? Has it peaked? Are you seeing some moderation in employee churn quarter on quarter?
Yeah, I think the word you used, peaked, is right. I think it has been going up quarter after quarter for the last 3-4 quarters now. And now it has peaked. But the way we report it is last 12 months, which is an average of 12 months, obviously. And therefore, given that it's been a rising curve, it is now stabilized. It is peaked and it is stabilized, and potentially, hopefully, it will actually start trending down a little bit on a quarter-to-quarter basis. But when you are looking at LTM, it will probably increase maybe for another quarter or something like that on a LTM basis. But on a quarter-on-quarter basis, you are absolutely right. It has peaked. Hopefully, will start coming down.
Okay, let me shift focus and talk about the growth outlook and the deal win momentum, CVK. Give us a bit more color on the texture of the deal win pipeline and the mix. Are you seeing large multi-year transformational deals, or these are more short-term projects that our clients are going in for?
We are seeing a mix of both. I think there are one type of deals which are driven around the cost optimization and integrated infrastructure and application operations and product sustenance, product engineering, large transactions. That's one type of deal. And then the second type is a lot of work which is coming in smaller packets, but number of work packets are coming, whether it is cloud migration or digital transformation, front office, back office modernization, whether data engineering, application modernization. So these are coming in smaller work packets. So we are seeing both ends of the spectrum. And today, our pipeline has a healthy mix of large deals, 100, 200, $300 million deals, and a very large number of mid-sized deals. That's what our pipeline characteristics is.
Okay, CVK, then you have been talking about how last year was a year of investment. Will FY23 be an year of the fruition of these investment? Will FY23 see a growth rate which is faster than FY22, and or whether the base effect will come into picture and the growth rate will maybe stabilize a bit? I know you can't give me hard numbers, but directionally, is it fair to expect, let's say, 15 to 18% growth in FY23 in terms of revenue?
Nisha, unfortunately, we cannot give you any specific numbers. We are all in the middle of planning, and it will all get concluded by March and April quarter. We will absolutely give you a directional view on what we expect in FY23. But all the leading indicators, you have hiring is going up, net additions are increasing, our pipeline is good, our booking is good. These are the best possible leading indicators that we can share. And for the rest, we have to wait till the April quarter results.